Welcome back, everyone, to another episode of the EUVC Podcast. Today, I'm thrilled to welcome two guests who sit at the front lines of embedded finance wave in Europe. Max Schertel, co-founder and CEO of finmid, a Berlin-based embedded lending infrastructure business for B2B platforms. They are, of course, backed by Earlybird, as you know, because that's the people we have on this podcast. And then, of course, Blossom Capital and many other great firms. Tim Rehder is joining us from Earlybird. He's a general partner and focusing on fintech, insurtech, and embedded finance infrastructure investments. Today, we'll explore how embedded finance is moving from small pilots to a core part of how platforms operate, what infrastructure and regulatory challenges will stand in the way, and why this shift matters for SMBs, platforms, and Europe's growth engine. Before we start the show, a quick note. If you're building or running a fund, you know it takes the right partners. At EUVC, we only work with sponsors we truly believe should be part of your tech stack. Please do take a moment to hear about them. And if you do, reach out, mention EUVC. It's the best way you can support what we do. Thank you so much. First up, Ace Alternatives. Every fund manager needs clean operations behind the scenes. From fund admin to tax and compliance, Ace handles it all across VC, PE, private debt, and real assets. They're trusted by some of the best investors in the world, and if you want peace of mind and a scale-ready back office, Ace should be part of your stack. Finding deals and managing your portfolio is at the heart of running a fund. Synaptic helps you discover startups before others do, and Portfolio IQ keeps your portfolio data sharp and ready for LPs. Together, they're essential tools for modern fund managers. When it comes to legal, you need a team that truly knows venture. Haynes Boone supports LPs, GPs, startups, and scale-ups across the full fund lifecycle. Smart managers make Haynes Boone part of their stack. We have two at EUVC. Tech Barbecue. Oh my God, who doesn't love barbecue? Europe's startup scene meets the loudest, friendliest family reunion ever at Tech Barbecue. From Nordic founders to global VCs, this is where ideas catch fire and relationships get real. If you're building or backing in Europe, Tech Barbecue is where you want to show up. And hey, if you've got a big fun announcement coming up, want to hit the headlines, or just want to tell your story out, do reach out to us because we'd love to help. And we've got some killer partners to help you get in the right media places. They've helped us land Bloomberg, CNBC, Financial Times, Forbes, and many more for the EUVC Summit, and we'd love to do the same for you.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
So, Max, I just told you, spotlight will be on you. I'll give you the very first question, which is just explain to everyone what you're doing exactly.
Absolutely. So we provide embedded lending infrastructure platforms. What that means is that on top of our infrastructure, any platform that serves business can build any kind of financing products anywhere in Europe with one single integration. So whether you're a large food delivery platform that serves restaurants and wants to offer them financing, or whether you're a PSP and you want to offer your businesses financing, or you're a ride-hailing platform that you want to offer the fleets financing, we can make any of that happen. Really, I would say the platform's imagination is the only limit to what we can make possible in that regard.
Tell me a bit about the opportunity of embedded financing, Tim. Maybe you could just say why you love this space, talk about the nuances of it, and how people should be thinking about embedded finance as an investment field.
So when we looked at the overall opportunity within B2B lending, we always had the thesis that the embedded part could be the winning overall model in this vertical. And why is this so? We thought that the level of integration that an embedded player can have will have the overarching winning risk model behind this, because a player like finmid, they sit very deeply integrated into the data platform and can have a completely different way of scoring risk on behalf of these players. So we think that ideally you can take banks completely out of the equation of sending customers of these marketplaces to these external banks, because finmid essentially enables these platforms to become an own bank in itself, or a financial service business. And in this context, we believe that the model just becomes in itself fully integrated, very seamless for everyone who is transacting with these types of platforms. And hence we believe that, embedded is the winning approach in B2B lending in the long term. Hence we also back finmid here in Europe.
Max, maybe you can talk a bit to the nuts and bolts of this type of business, because now we've got the broad perspective, but what exactly do you then handle? What's on you? What's on partners? What's on the people, the customers of yours to solve, so to say?
Yeah, absolutely. So I think maybe if we take one step back, right, what we found so exciting about the topic when Alex and I sat together and set up the company was really the overall economic impact you can have if you get this right? You can have a true impact on growth of businesses. You can have a true impact on difficult times that businesses sometimes go through, right? And I think that was the overall idea. How can we make sure the economy can grow? And I think that's what really excited us about the business. Now, when it comes to the nuts and bolts of running it and making it possible, our hypothesis was always that, in particular, the large multinational platform, they need something that's incredibly simple, right? It needs to work the same way in France, in Germany, in Poland, etc. And our job is then to make all of the complexity that's behind that, and we can talk about that at length, but make all of that complexity go away, provide the platform with really one simple integration that works wherever they want to offer this to any of their customers. And I think that was really key. Now, what that meant is that I would say, at least from a regulatory and operational standpoint, you want to own as much and control as much as you possibly can, because only then you can really live up to the promise and of providing a simple integration. You don't need to ask other people questions before you can offer platform something. But then I think one very important consideration is that we always also had the thesis that you can build this really, really balance sheet light, that the capital doesn't need to come from us. And I think that's a really core view on the business here. And there, then we really work with anything from private debt funds or institutional investors. And I think, Tim, you said ideally, banks don't need to play a role there. And I agree from a distribution perspective. I think what banks do have is big balance sheets. Yeah, they have the deposits of customers, and I think we're actually a great opportunity for them to invest into their funds, their own funds, with good risk-adjusted returns ultimately. So again, like regulatory and technical, fully own that, because that's key to the experience. Everything around the data engine, that's really, really key. But then when it comes to pure capital, that's not our job. We make that happen, but that's something that comes from others.
What is the economics of this type of business? Is it a super high margin? What is it that's the super attractive case of this?
Yeah, absolutely. So I think the very, very attractive thing about it is just the market opportunity is huge, right? If you think about who needs access to capital, you walk around town, you ask your friends, you probably have a business, Andreas, as well, right? Well, probably you have one that doesn't need that much capital, but the average business needs capital all the time for investments, for hard times, right? For short periods, for long periods. So there's just so much demand. And I think that's what's really, really interesting about this. When it comes then to margins and everything, you can operate this with really, really strong margins. Today, I think, we have a gross margin above 60%. But I think what we really care most about is how can we look at risk and pricing together and then really optimize the net revenue that we can generate from this, right? And sometimes maybe that can be in a higher margin. Sometimes that can be in a lower margin, because then that can have a positive impact on conversion. Yeah. So it's not like you want to only optimize for margin. What you really want to optimize for is overall net income. And again, just given the size of the market opportunity, there's no question that you can really build a huge business in the space.
Maybe I can add to that, Andreas. I think like the platform itself obviously provides the center for the risk pricing, as Max says, because in the case of a Wolt or Lieferando, just you take away some of these finmid customers, they obviously do the chunk of the revenue of these customers, but you can also obviously access the other part of their, let's say, non-digital revenue by looking at bank data, for example. So You use the platforms to precisely calculate the risk of that restaurant, but you also use the platform to essentially like distribute to them. So your cost of acquisition becomes only acquiring the merchant or the Wolt, the platforms of the world, but then you use them to distribute the offering to their end customers, which in most of these cases, you speak to a few thousands of end customers. So the model is obviously like an indirect sales model, but you use, so to say, the platform to like price the risk to the end customer directly. So there is not this 1-to-2 relationship in the sense you don't really know the customer, which is obviously sometimes just risky in the sense of selling indirect early. But here you really gain access to like the true underlying transactional data of the customer directly. And although you don't speak to them directly, you really know them directly, which is, I think, extremely powerful in this type of business model.
And maybe to add to that, right, I think the great thing here is that everybody has the same interest. The platforms want healthy businesses on their platforms, right? So there's automatically a positive selection. They want businesses that do more and more. Businesses want to grow naturally because, if you're a business owner, you want to optimize money. And then we obviously want to make sure that we support good businesses as well and we help them grow. So I would say really in this triangular relationship, right, we can really help each other because we have very, very, very aligned interests, right? And I think that's the great thing about the model. Everybody ultimately really has a strong economic benefit from this.
Can you share, Max, some of the names of your prototype customers just for everyone to understand? And then we can maybe from there dive a bit deeper into to the problem you're solving for each type, so to say.
Yeah, absolutely. So let's take an example, like a very tangible example that most people are probably familiar with. The first very large platform we started to work with was Wolt. So out of the food delivery space, we're live in 19 countries with them today. And the way that the product works really is, if I own a restaurant, then I use Wolt. I obviously sell the food, but I also have what's called a management dashboard. So if I'm the owner, I look at that and I see how much I'm selling, how much revenue I'm making, et cetera, et cetera. And what Wolt's basically doing, they offer then me as a restaurant directly in their financing before I ever had to ask for it, right? And I think that's a huge shift here where in financing solutions, you move from a model where I always, if I'm running a business, have to go somewhere and ask for it and then see what happens. And here you move to a model where somebody's proactively giving me an offer. I know it's there. And when I need it, I can draw the money instantly, right? And I think that's really what also makes this a lot more convenient for the businesses, naturally. That's why distribution works so effectively, as Tim mentioned before. And again, the platform benefits because they then see the growth of the business, and then it naturally ties the businesses also closer to the platform. If I can see that a platform like Wolt's really supporting me all around, not just with my sales, but also when I need to grow, when I have to have time, then that's something that has really strong impact on retention. A product like that has in retention improvement of up to 80% compared to businesses that don't offer it.
Can I ask you both about the impact of a business like this, or of this solution for the market, so to say? Are we giving a more frictionless experience to people or problems that are already being solved by banks? Or is this actually more money being put into the system and thus making smaller businesses more effective in running their businesses? Because normally they would not be able to get serviced.
I think it's really the latter. Sorry,
Yeah,
Max, but I'm sure we're going to say the same, or at least approximately the same here. It's definitely the latter, because you include a part of the overall market economy that didn't have access to capital before. Yeah. So, or at least partially, they didn't have access to capital before, and finmid now enables them to look at a complete different manner to grow their business. So some of these, small restaurant chains, obviously their whole transactional data that finmid is using in order to price the risk of the restaurant has never been used before. It's nothing that really banks pay attention to. So they look at very static historical type of data in order to understand whether this is a customer they can provide credit to. But the way that finmid dynamically scores the risk on like the different transactional data that flows through the business in a very dynamic way provides a complete different profile of the restaurant itself. So you really enable them to look at different marketing initiatives for their business. You enable them to maybe look at different assortment, but maybe enable them to look at a different brand campaign for their small restaurant. So it's definitely enabling a part of the economy to grow, which couldn't do before, which we ultimately, loved about the model. I mean, ideally this is, or I think generally this is the overall equation of alternative lenders in itself. I mean, you have seen some of these maybe e-com lenders where there was a similar type of inclusion risk before, but here we believe that the type of really embedded infrastructure, so sitting as part of the marketplace itself, provides a complete different way to really look at the underlying risk equation.
Yeah, I agree with this. Right? Where we are today is you have more data points that you can look at, just stuff that wasn't possible to ingest into data models before. And you can look at not just the business individually, but you can look at tens of thousands of businesses at the same time. And you can look at the historical performance of those, right? And I think that's really what creates here the opportunity to first serve a part of the economy that wasn't served very well. But now if I think maybe 5 years down the line or longer, then I think this notion of embedded will become more and more popular, and I think it will attract the broader economy, right? And the way I like to think it, and I'm sure this will resonate with Tim, right? When I started my career in financial services, it was actually consumer banking with N26 in very early 2015. Back then, mobile banking was a niche thing, so to say, right? When I told my family and friends I was going into a mobile banking, it was like, what is this? Why do you need this? Maybe there were a few people that started to use it, but it wasn't broadly popular. And I think, obviously, over the past decades, it's absolutely normal that everybody's using this. And I think you see a similar notion here where it works really well now is a segment that you could not address as easily in the past. Smaller businesses, because they also choose convenience, they need the speed. That's what they really care about. But I'm confident that over the next 5 years, the latest within the decade, we will see that this will be a product that every platform will offer, and that it will be something that will be normal for businesses to use because, again, it's just so much easier to use. It's just so much more convenient, and the data is always better than what you get from the bank, and that will ultimately then drive because customer acquisition is just much more efficient, right? It will drive prices down. And then because of the convenience, because you can really create a positive selection there, you'll just be able to address, not just a portion of the market, but I'm really confident that over time, you will be able to address the market as a whole. It will take time, and it's not where we are today, but that's definitely where I see things moving.
Can you talk a bit about the typical finance sizes, like the size of the lendings that you're doing? I imagine that they're not very big per client, and it's quite more often that you would go to your bank and ask for a loan.
Yeah, it's a very good point, right? And that plays, I think, into what I've been saying, that you move the market, you move as your data models move and improve, right? You also move to different segments in the market. I think, financing is one of those sectors where you can make endless money today, but you want to make sure that you don't just make endless money today, but you make that in the future, right? So we very consciously set, and maybe worth taking a step back and explaining how we look at data, right? When we look at platform data and we look at the traditional financial data and anything else you can ingest in terms of data into that, well, we want to make a prediction about whether the business will still be with the platform within period X, right? That's what we care about. And that period X, defines how long the maximum repayment period is. And then because we look at the revenue business is generating throughout the time, it also defines how much we're willing to finance for an individual business. And the range today can be anywhere between 1,000 euros and 250,000 euros, in rare cases higher. But I would say where the majority today is playing is really anywhere between 10 to 20,000 euros. And then again, with financing durations of up to 1 year, what we do see is a really, really strong renewal rate. I think 85% of the finance businesses that take the financing, they actually renew the offers. So there's a strong recurrent component. And what we also see, and this is probably what you wanted to touch on, Andreas, is yes, there is demand for longer periods. Yes, there is demand for much, much higher amounts. So we're really trying to restrict ourselves. Let's say, where are we really comfortable with the data? Where do we think we can make reliable predictions? And this is really something we're working on, right? How can we be better and better at forecasting what the future will hold for business? And that will then drive how the offering evolves over time. And that's then also how, you're able to attract different segments in the market.
Tim, you spoke about maybe there's a future where the banks will not be needed at all. So one thing is that you can pull data with this from the actual transactions of the business, and you have much stronger data to build on than most banks would ever do, especially for a small loan. I imagine that there's a future where, given the entire AI boom and everything that's happening, where you would be drawing in tons more data, even on consumer loans. As an example, we have VCs that are underwrite founders based on their trajectory in life and how quickly they've built up their LinkedIn network and blah, 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 which in a sense, allow you to loan out to a person on a very different risk scale, so to say, than any normal bank would do. Could you talk a bit about the implications of AI for a space like this and where you see these platforms moving?
Yeah, 100%. So I think, first of all, Max analogy in that context was right. I think, or we believe internally already since quite a bit, that the banks will ultimately stay, but the service offering will somehow be reduced to like providing balance sheet and being like the overall partner to fintechs like finmids in the long term. But then you have obviously APIs such as the embedded API from finmid, who build the deep integrations to external providers, and then also take over the overall distribution, which traditionally banks are also not very good at. So you basically reduce them towards their core, and the core they can do well, but everything else will be taken over by other providers who just become overall just the tech part within the equation. And I think that AI overall is already there in most of the parts. So you obviously have seen some of the consumer lenders who started their, ML-based risk models, but then they obviously continued in order to become more reasoning enabled, i.e. becoming more Gen AI driven, or opening up their risk methodologies to include some of the general AI components. And I feel finmid is doing everything to enable this component as well, because I think in an ideal world, you're trying to become as holistic on the restaurant, but you guys, we have only talking about restaurant, but obviously this is a quite horizontal play in the medium long term, and they just signed first customers on the fleet financing part, where they also enable taxi drivers to now buy their cars in a complete different manner, and it's also completely integrated into the driving platform. So I think this holds true for many other applications. But in the end, what you're trying to do as a financer, become like the most holistic platform for trying to understand what your customers are doing. And in that instance, they already have the PSD2 integration right now, at least for loans that are above a certain size. But then they're trying to understand, okay, what are these types of customers doing outside maybe of their core business? Can we include some of the maybe social media signals that can drive overall conversion of certain business areas? Do they launch a certain brand initiative that can have an implication of the business? And I feel like the AI part in this is trying to enable these platforms to become even more holistic, which means the risk models will become better over time, and then the model obviously also becomes stronger, et cetera, et cetera. So I feel this is for all fintech companies that are in this financing landscape, just a must do, to be honest. Nothing they can eventually decide whether this is good for them or not, but it's an absolute essential part of understanding your customer. And obviously this ChatGPT component just gives people complete different context generally on the customer.
No, I 100%. Maybe I can, give you a few more tangible examples of what that looks like in practice, right? Because I think the potential lies both in the running the business and then the ability to look and analyze the data, right? So when it comes to running the business, I think we've made huge strides in particular in the past 1 to 2 years. And I'll give you a practical example. For me would be adverse media screening. So that's something where, before you make a payout, you check out, is this a serious business? Is there anything I should know? The traditional approach, maybe you skim a few databases, right? So somebody takes a look at something and then you take a decision. And what we've seen is that like with an agentic workflow, you get a better result than the traditional financial databases that you use for this. You can pay, for example, LexisNexis, and they'll give you a result. You get a better result there. You get it much quicker, and then you get it much cheaper, and much cheaper certainly than any human could do it. And it's, that's I would say really on the operational side, a very practical example. On the data side, which for us is the biggest question, right? How can we use those millions of data points to create predictions of the future? I remember 4 years ago when we started the business, we hired a more traditional risk person because that's the right thing to do. You want to make sure you have a solid baseline. And what we've realized over time is that that's ultimately not what you need. What this is a data science problem, not a problem where you get in somebody that's greatly qualified from a bank and that opens a drawer, right, and pulls out the risk model. And I think what we've seen is that naturally human nature is a limitation in terms of how creative I can be, how many ideas I have when it comes to looking at data, right? And then there, AI has really opened up the possibilities where you say, look, here's literally millions of data points. How can I potentially look at this? What are new ideas to do this, right? How I can really on a daily basis almost create new models, backtest them on my historic performance, and then come up with something new, right? And I think that's just something that just wasn't possible. And I think that the advantage that we obviously have is that we're much quicker in deploying these things than, obviously a bank would be. And then last but not least, the bank just doesn't have that much data, right? And I think which is an advantage on top of that, right? So you can both execute quicker and you execute quicker on much more data. And again, that's just absolutely, as Tim said, that's a must. But you also need to constantly push the organization for that because, it's something that needs constant rethinking of processes, constant rethinking of how to do things. And that's I would say not necessarily human nature. Humans like to do the same things all the time if they can, right?
Max, you've done something that I think a lot of founders out there would love to learn from because you've scaled incredibly quickly across 30 European markets, more than 30 European markets. I'd love to ask you a bit about that journey, how you've been able to do it, what's most important for people to keep in mind. So maybe if we start with just a clear description of where you are today, what you've accomplished so far, so to say, and what's the next big thing. And then from there, we can dive into the playbook of what you've done.
Where we are today, we're live in 30 markets in Europe. So it's the EU27 UK, Switzerland, and Iceland for what it's worth. The reason why we've pushed so much for that is, again, because we've seen that if you want to win with large multinational platforms, you need to be able to support them everywhere. And if Bulgaria is a market that's relevant for them, you need to also be there and not just in the larger Western European economies, right? So for us, this was really a given from the get-go. What helped us is the experience of the team. ultimately what we do is, financial services. You need to be very cautious about what regulation looks like. You need to find your ways around that. You need to understand how money moves across currencies, across countries. And again, what helped me is that I had seen these things back at N26. I had 6 years of exposure there to a lot of growth on a lot of countries, and a lot of things weren't very well. And some things, maybe we thought maybe we'll try those things a little bit differently. But I said that helped. And then ultimately in these things, it's about attention to details. Am I really willing to do the ugly work of reading regulation? Am I willing to do the ugly work of looking at how payments are processed across different partners, right? I'd say it's a lot of this not very glorious work that needs to go into these things. But when you're really willing to do it, when you're willing to push hard on these things, then you just build a simplicity that just others can't, right? Where in particular, large platforms just don't do it. And then, or if they were to do it, they would need years to execute through this. And really using the fact that the organization is very nimble and hopefully will always stay very nimble, given that we built infrastructure. And then that willingness to do all these ugly things that others don't want to do necessarily. I think those are really the two key factors.
Obviously, Europe is one of the harder places to navigate when you want to scale. But on the other hand, Europe has often been commended for our fintech rails and our very clear frameworks to actually be able to work across borders. Could you talk a bit about both some myth busting in terms of Europe being super hard to build in, but maybe also be very clear about where are there still challenges?
I mean, those go very, very closely hand in hand, right? So I think from a regulatory standpoint, there's a lot of willingness to make lives easier for people, but it's a huge continent with a lot of different interests. And what you end up realizing as a founder is then, maybe Italy has this small law that really makes life a little bit more difficult, and you need to build something different for Italy. And then Greece has something like this. And then in Latvia, direct debits don't work the way that you think they should, right? When you just, read the things that I think. So there's a willingness to make everyone's life easier. So I think in that regard, it goes into the right direction. There's just a lot of, I would say, historic baggage that we still carry around. And then a lot of the devil's in the details really on that front. What I like about Europe, though, is that I'm really, really confident that once you've mastered the complexity here, then it's a lot easier to expand the business beyond that. And again, I can think for a platform like us, Europe is a huge opportunity. It will be the future. Sorry, it will continue to be a huge focus for us. But platforms have already asked us today if we can maybe support them in countries outside of Europe, right? And the reason why I'm much more confident in our ability to support them with that is because we know how to solve for the complexities we have here. We know how to run business in 30 countries with all the different languages, with all of the different payment rails, with all of the different currencies, and everything that requires really from a regulatory standpoint. And so in that regard, I think Europe is maybe a little bit tougher to get a large business off the ground. I'm sure Tim can talk to that from a VC perspective. But once you know how to do this, you can go much more confidently in expansion beyond that. And again, what we ultimately want to do is we want to be the global partner for the platforms to work together with. It will take us a while to get there, but I'm 100% confident in our ability to do this.
I think generally, I mean, we have seen so many fintech companies here in Germany and or in Europe who started local and then went a bit across the borders, passported their licenses. But ultimately, the largest challenge was always to tailor their proposition, their product or services to local needs, right? So I think especially on the retail side, this is just still extremely complex for fintech companies to master. And it takes maybe even much more time than a company such as finmid had to take in order to, become a bit more pan-European. Because I feel like their biggest advantage here is that they always have the platform who is in the end in charge of this local rendering and making sure the local restaurants or, again, taxi drivers or any of the other customers need so that they understand the finmid proposition. Hence, I think the level of here, again, the integration that finmid is doing. So most of the restaurants essentially don't even see finmid in the background. When you, for example, look at the Wolt product, it says Wolt Cash, but no one ever sees that. I think if you maybe open up the API and look at the code, you would see that there is a finmid API in the background. But other than that, the end customer doesn't really transact directly with finmid itself. So the platform is taking this part, and I feel like this part is still the largest part in order to become more pan-European and then also maybe global. And I think, Max, this is still a bit your secret sauce, why then also European expansion was essentially so fast. So you didn't have to do all these translations and making sure your local acquisition in these countries is adapted and also works now in France as it worked in Germany. So it was more like, from the software offering quite European from day one. The biggest complexity is always, more like the cost of capital part, because when you want to be like, and don't forget, we even tried that at the start when we wanted to like build the model completely asset light, i.e. enabling the banks to lend the credit on their balance sheet. But we figured out for the bank, it was, first of all, we didn't find a capital provider who could do like European or pan-European distribution for us. Then secondly, once you did it, you figured out maybe they're a bit too slow. So we had to like build the model full stack, i.e. taking off the balance sheet ourselves, with the idea once the model is has seen a bit more scale and shows the number, to then also outsource the capital part again. But all I wanted to say, I think that the model itself is quite pan-European from its start. The cost of capital distribution is not. Hence, like, we had to build this part also on our own. But it doesn't require much of these tailoring, localization, because the platforms need to tackle that part as well. So I think from that angle, it's quite nice to scale this pretty fast.
Yeah, maybe doubling down on this, right? To give also, again, tangible examples from the field, right? We still actually also make sure we understand locally how it works, and it's really about distribution, as Tim said, right? We make sure the product works in any language. We make sure the calculatory things are done also in the local currencies. We also make sure we understand which kind of distribution works best in a given country. And you see big differences across platforms, right? We've seen that physical mail works really well in Sweden versus in Southern Europe. WhatsApp works very well in the exact same setup with the exact same platform. So one person still needs to understand that within us, but that person then can enable many, many more people. I think the most extreme case was where we were working with a platform and they have account executives, right, who then also talk to the businesses on the platforms. And we had a call where one person on our side was educating 160 account executives on the side of the platform, right? That then are talking to the businesses. So that's a scale that I would not want to build that inside, right? But then obviously you can really tap into that scale of the platform. They know the businesses, they have the conversation anyways. The businesses want the products, the platform cares about it because they see an uplift in core revenues, right? And that's, I think, again, a really nice symbiosis between the people. On top of what Tim said, right, on the capital side, that's obviously something that's been a lot easier as you scale the business, right? Where we are now, you can run this really, really efficiently across borders. But for sure, like initially, that's something that's takes a little bit of headspace, I would say, to get that done.
I imagine, Max, that you could talk for hours on partner strategies and how to make sure you have the right incentive designs to make sure that they heavily distribute your product over others, and you actually also are on top of how they do it and so on. Could you maybe just deduce a couple of principles for people that are working with a strategy like yours where you very much rely on partners?
what it comes down to, ultimately where we are today, it's do you drive core metrics for the platforms? Do you drive, in our case, it's usually do you drive GMV? So do businesses do more business on the platforms? And is retention better? Now, those are really the two questions you want to be able to answer. Now, the challenging thing, right, from a founder's perspective is you go into it, you found the company, you don't have the evidence, right? And I think that's what's really so hard about building businesses in the space, is that everybody understands the intellectual thesis behind it, but it takes just a while to get the numbers, right? And I would say the way to get over that crossroads is really just push, right? This is no easy way around this. You need to find people that believe on the platform side. Then ideally you find evidence from somebody else that you can point to, right? And like, frankly speaking, the US has been a little bit more advanced in terms of similar products. So there were ways to point to the US and say, look, it worked there. This should also really work here. And then once you have the first one that, gives you maybe a little finger and says, okay, let's see what we can do here, then you need to do everything you can to execute as well as you can to make sure they see the results quickly, and then use that to ultimately build on top of that. Yeah, but I'm afraid there's no shortcut initially. It's just, it's like abstracting the regulatory complexity. It's just a lot of hard work and being pushy and just not taking no for an answer, right, from large organizations.
But definitely took us a long time to get there. I mean, I think you're speaking about likely the most decisive part of the business here, Andreas. I mean, has been part of our board conversation, if I'm not mistaken, but definitely over a year, how we can cut through that noise. Yeah, how can we make sure the business is aligned to our business goals? And it's extremely tough to get there. Sometimes I think you can push as hard as you want. Obviously, pushing always helps, but as long as the financial incentives are not aligned, i.e. not aligned in the core business, then this model is a bit prone to fail. And we have seen companies failing because of that, although they had a fantastic, I was always talking about this, maybe without stating a name, but we had an AI payment fraud company in our portfolio who was distributing their product to payment gateways. And they also weren't in touch directly with the customer, but were always transacting through this indirect sales channel. But their financial incentives, they were aligned, but not aligned on the core business of the payment gateway, because it was mostly distributed only to the end customer, and the business partner didn't sell this in a way I believe this product needed to be sold. But anyways, I feel like here the guys really cracked that, but it wasn't easy. And I would always break it down to core business alignment. Other than that, I think, you can be the best salesperson and best pusher of the world, but then it can be extremely complicated to get it work.
I want to close the podcast, Tim, by asking you, what have you learned from Max? What's the most important thing you've learned from working with Max and the finmid team?
So first of all, I think their founder market fit was exceptional here, and the journey, i.e. they have seen this European scale at N26 before. So both Max and Alex were so early at N26 back then, so that they could experience that firsthand why they worked at the company. And I think they have proven themselves to be extremely persistent. So I think you realize by now it wasn't always easy, but I feel like none of these companies who operate in financial regulated markets, these journeys are never easy. So it's not easy from the product build, and then distribution is even more complex, that you need to have founders who manage to stay extremely focused and extremely persistent to get there. And I think it was a rare combination of the two to demonstrate they can do both. I mean, there's still some stuff to go from here, but I think the journey has been great so far. And I think, I would definitely put these two traits in front of them being pretty good at it.
Max, you're obviously an incredible guy. What you're doing with finmid is so important. I Cannot wait to follow your journey as you progress from here. Thank you, both of you, for coming on the podcast today.
Thank you, Andreas.
All right.
Before we start the show, a quick note. If you're building or running a fund, you know it takes the right partners. At EUVC, we only work with sponsors we truly believe should be part of your tech stack. Please do take a moment to hear about them. And if you do, reach out, mention EUVC. It's the best way you can support what we do. Thank you so much. First up, ACE Alternatives. Every fund manager needs clean operations behind the scenes. From fund admin to tax and compliance, ACE handles it all across VC, PE, private debt, and real assets. They're trusted by some of the best investors in the world, and if you want peace of mind and a scale-ready back office, ACE should be part of your stack. Finding deals and managing your portfolio is at the heart of running a fund. Synaptic helps you discover startups before others do, and Portfolio IQ keeps your portfolio data sharp and ready for LPs. Together, they're essential tools for modern fund managers. When it comes to legal, you need a team that truly knows venture. Haynes Boone supports LPs, GPs, startups, and scale-ups across the full fund lifecycle. Smart managers make Haynes Boone part of their stack. We have two at EUVC. Tech Barbecue. Oh my God, who doesn't love barbecue? Europe's startup scene meets the loudest, friendliest family reunion ever at Tech Barbecue. From Nordic founders to global VCs, this is where ideas catch fire and relationships get real. If you're building or backing in Europe, Tech Barbecue is where you want to show up. And hey, if you've got a big fun announcement coming up, want to hit the headlines, or just want to tell your story out, do reach out to us because we'd love to help. And we've got some killer partners to help you get in the right media places. They've helped us land Bloomberg, CNBC, Financial Times, Forbes, and many more for the EUVC Summit, and we'd love to do the same for you.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.